And we're live. Welcome back to the Better Than Bitcoin podcast, where I talk about the future of money. I'm your host, Jana Vasquez. This week has been an interesting week for Bitcoin, as always, so let's talk about it. For a market recap, I am bearish in the intermediate term and short term, but bullish in the long term. In the last episode of the podcast, I was looking lower in my bullish and bearish case. For my bullish case, Bitcoin fell directly into my bullish retracement box and bounced higher to a high of 77.75 on Thursday morning, and I believe right now it just reached 7,800, like a little peak. My bearish Elliott wave count got broken, so it's forced me to go back to the drawing board. And this is turning out to be a sideways overlapping structure that is just a pain in the ass to count correctly. So I'm not going to be relying on other technicals today to know what to expect, so I'm not completely in the dark. So let's pull up my chart right here. So starting out the analysis zoomed out to my long-term time frame, which is a weekly chart. You can see that Bitcoin isn't in any sort of trend here. It's just sideways with some heavy volatility up to 20K, down to 3K, up to 13K, down to 3K. It's just volatility, but you can tell that it's leveled out around right here, around the 6,000, 7,000 area. Around high 5,000, 6,000, 7,000 area. That little area right here. It's consistently back to that position once, twice, and now a third time. Because of this wacky triangle structure, I believe Bitcoin to be in some fourth wave with a wacky count. So that would put, let me elaborate, the 1-2 back there. This is a Coinbase chart, so it doesn't go far back. I believe this to be a 3, some wacky 4, and a 5 higher somewhere. Make it white for primary. Not micro, something big. I know it's not exactly that. I'm just saying, just for purposes, that 20K top be a wave 3. We're in some sort of wave 4 that will end somewhere, with a wave 5 going up to somewhere high. But after that, that'd be a heavy correction. Heavy correction. And this white triangle count is based off of Ryan Wilday's count. If you don't know who that is, he's a very good Elliott wave analyst, and I'll put his Twitter in the description below. So based on moving averages, you can tell that we aren't in a trend and still sideways, because as of currently, it's just there's no clear-cut trend where price is consistently either above and in an uptrend, the moving averages, or below the moving averages in a downtrend, like consistently. You can also see, which I will pull up my DeMark indicator script. You can see a DeMark sell countdown 13 sell signal on the weekly. I'm filming this past 8 p.m. on a Sunday, so that's why the new weekly bar just appeared. But this TD sell countdown 13 on the weekly just shows exhaustion of this little bounce trend from 38.50 all the way up to where we're up to right now, around 77.70. So since we're in sideways chop, stochastic indicator is actually useful because it shows overbought and oversold. Let me pull it up. It shows overbought and oversold levels in trading ranges, like we're in right now. This triangle, this is basically a trading range. And yeah, like for the weekly chart, this indicator is going to be useful. It's not useful right here, as you see an uptrend. It's not useful because it just pins the price or pins the indicator at a level of 80 or above, pins it to overbought, and in a clear downtrend right here, this little section right here, it pins it to oversold or overbought. Wait, no, oversold. Whew, brain fart. So when you're in the clear chop right here, it's usually a good indicator, but right now it's not telling me anything. It's just at 50 and 55, which is pretty neutral. It's just like the middle of the range. Also, another thing I want to pull up, I can only have 3 indicators at once, so I have to like delete and constantly put back, is volume. So it's another bearish indication for me in the weekly is that this obviously decreasing volume and with price increasing. That is really, really bearish. I mean, just based on all these weekly indications, I just feel like Bitcoin needs a correction. A more than 100% bounce off of a low in a generally choppy trend is just not viable. So I'm going to zoom into my intermediate time frame, which is a daily chart. And what you see here is either the start of an uptrend. As you can see, my moved averages made a bullish cross, so this is a start of an uptrend, or just the peak of a trend, or in the process of making a peak of the trend that just extended it a little bit far. Since the stochastic, pull up again, because where are these things at? Okay. In this little range right here, this is a trading range, just up and down, and now we're breaking out up of it. This was a uptrend right there, or not really uptrend, it's more of a bounce. I wouldn't really call that an uptrend. Hold on one sec. Yeah, okay. So you can see what is either the start of an uptrend since the moving averages has just made a bullish cross, or the peak of a trend that has just extended a little far since the stochastic has just entered overbought territory. Stochastic indicator is useful in this time frame because prices found its way back to the moving averages in the start of April, around here. Usually, so when price dropped down to this massive sell-off, it had to find its way back to the moving averages as it usually does. Same thing in clear uptrends or massive uptrends. As you can see, when it goes parabolic and goes way above the moving average, it eventually has this one bar, this 13% bar, going back down to the moving average. That's what I mean by returning back to the average. Yes, it's useful in this time frame because since price has found its way back to the moving averages in the start of April, around here, found its way back to the moving averages, price has acted choppy in that range, like I showed you with this little box right here. Just really, really choppy. And it's just impossible for me to figure out how to trade in choppy stuff like that. That's why Elliott wave counts have been super hard for me in this small term time frame. What makes me think is that this price action has been super choppy off the bounce. It makes me think that it's some sort of wave 4 up, and the drop to the 8,000s, the drop from the 8,000s to the 3850 was a large and fast wave 3. So based on that scenario, that makes a new low below 3850 plausible. So I'm not hyperbole as taking that scenario off the table, basically. But it's still there. But what I see is if it goes below that 3850, chances increase that we'll revisit that 3200. Or maybe not, because if it's an A, B, C, stuff like that, it can technically revisit the same area and overlap as some overlapping structures in Elliott wave appear. It's just annoying to count. So yeah, so that's all for this time frame. I'm going to zoom in further to my short-term time frame, which is an hourly. That is some serious chop, just sideways for a couple of days. Past 4 days has been ranging from usually at 7,400-ish to 7,800-ish, where it just peaked right there. It always seems like whenever I record this podcast, Bitcoin's making some sort of move. I just started making my script around the middle of the day, like around here, then just started doing some crazy stuff. What I want to point out is there is a clear uptrend. There is a clear uptrend of higher lows, higher highs. That's just a rough drawing. Nothing perfect. There's been a clear uptrend in this time frame. And let me pull up MACD, because in an uptrend, stochastic indicator isn't really that, like I said, isn't really that reliable. It gives a lot of false claims. But what I want to pull up is the MACD. The reason I'm switching to MACD, because stochastic gives a lot of false indicators and trends, since the value can be pinned to overbought and oversold levels. With the MACD, you can see price rising, making new highs in that local channel, while just has some lame momentum in the MACD. So price rising, momentum is not, and that's a very bearish signal. So this little small uptrend is losing some steam, basically. I try not to trade the weekends because price action during the weekends is very choppy and very unpredictable. So because I've been burned more times than I've been rewarded for doing so, for trading during the weekends. So yeah. So as a summary, I'm looking for a pullback in this bounce because price has been rising the past week or so with some pretty piss poor momentum. That just makes trades risky, so I've exited the market a week and a half ago. I didn't intentionally exit the market, to be honest. I fat fingered a trade, so that means that I sold more than I wanted to based off of messing up, like literally typing. I messed up a trade and sold more than I wanted to. So basically, as a summary, on the weekly, there's no clear trend, with stochastic being neutral and an exhaustive momentum sell signal. On the daily, there's either the start of some uptrend or some trend or an overextended bounce. On the hourly, there is an uptrend with a diminishing momentum. So I'm gonna draw some Fibonacci retracement lines. Let me pull up the day, easier to draw on. Let me get rid of this. Fib retracements to basically, yes, I know that if Bitcoin makes slightly higher highs in like the next 48 hours, yeah, I'd be moving this Fib retracement up and up. 78.10, 78.22. I like to make it exact by using the coordinates. .99. 38.58, I think, is the low. And usually 0.5 to 0.618 is usually a good retracement. Obviously, this as if price makes higher highs, slightly higher highs, yeah, I'll move this box slightly up. But usually that's where I'll be looking. I wouldn't be upset if it hit 38.2 and bounced off and made a parabolic uptrend after the halving event. But I'll just extend it out to the 38.2 just in case. Yeah, I mean, low 6,000 pullback would be great. It'd flesh out all the hyperboles that people are going on Twitter screaming new all-time high soon, new all-time high soon. After that, yeah, so that is all. So yeah, that's all for episode 25 of the Better Than Bitcoin podcast. Don't forget to like the video and subscribe if you like this in-depth analysis. Follow me on Twitter at Jane Vasquez, and peace out.